Hi guys, welcome back. Today we're going to be looking at Novartis, or their ticker symbol NVS, and we're going to be looking at whether this company is a buy. It has a good dividend yield and is currently trading at a cheap valuation, so we're going to be looking at this company and doing a stock analysis. If you do enjoy, please subscribe or like the video. It is free and it does help me out a ton. If not, thanks for watching anyway. Onto the video. So before we begin, just a little bit about NVS. So Novartis International is a Swiss multinational pharmaceutical company based in Switzerland, and it's one of the largest pharmaceutical companies in the world. What sets it apart from other pharmaceutical companies is its deals with Microsoft and Amazon. So it's inked a 5-year deal with Microsoft to use artificial intelligence technology to develop drugs. And it also has a deal with Amazon to use their web services and AI-related products to enhance their supply chain, increase their drug manufacturing abilities, and boost their distribution as well. So analysts on a whole are pretty bullish on NVS. They have an average target price of $105, meaning that they see a 20% upside potential in this company. So before we begin, some fundamentals about this company. So the company has steadily been growing its top line since 2018. So in 2018, they had a new CEO who assumed office, and he made main focus shifts in the company's goals. So the goal is now to focus 100% on medicines and improving their pipeline to improve margins. So increasing their pipeline and investing in their pipeline services lowers their reliance on products that are not defended by patents, also which traditionally have lower margins. So the company expects single-digit revenue growth in 2021, but increase this in 2022, 2023, and the rest of this decade. So the company also has a pretty good dividend yield. So the company has raised its dividend for 24 years in a row. So I would classify this company as a dividend growth company because its long-term trajectory is upwards. On top of this, the last 20 years, the growth rate has been at an average of 7% annually. While this isn't great, it's pretty solid, especially if you factor in the amount of dividends that it has paid out. Next thing we're going to be looking at is the company's valuations. So the company's valuation is pretty attractive. It's 13 times forward earnings. So this is, I believe that this stock is a good value stock as of right now, as its current valuation is lower than its average valuation. On top of this, its growth rate is higher than its average growth rate. So if you do buy Novartis right now, you're buying a company that is cheaper than usual, but is also looking to grow faster than usual, which is overall a pretty good investment. So the company offers good fundamentals over the last few years, especially with the rise of their new CEO. Their top and bottom lines have also been growing consistently for the last 3 years. Tie this in with analyst expectations and you have a pretty solid company. So the next thing we're going to be looking at is future opportunities. So the first growth opportunity is that what the company defines as emerging markets. So according to their definition, this is the entire world without Europe, North America, Japan, South Korea, Australia, and New Zealand. This primarily leaves Asia and South America as the primary growth opportunities for this company. So the most important growth opportunity that they have listed is China. So the sales in China currently account for 5% of their sales, and the company's goal is to double this over the next 3 years. The company is also investing more into their pipeline systems, so that means to keep promoting it. So in the last quarter alone, the company received 3 approvals for their drugs out of the total pipeline of 167 products. So the more products that they have in their pipeline, the higher chance that they're going to have more of them being approved, which obviously brings a lot of revenue and profit for the company as well. The next thing we're going to be doing is a technical analysis of this company. Over the last few years, the company has gone from all the way from $68, reached multiple highs, hit $100 a few weeks ago, and is now trading at $85. So this is about the 200-day simple moving average. So $85, $86 is a pretty good buy price for this company, especially with a PE ratio of less than 25 and a pretty solid dividend yield as well. So some final words, the company has remained stagnant for the last 10 years, but overall it is a good company, has solid future growth and has good fundamentals and a good valuation. But one thing we do need to keep in mind is that the risk is that with the new management, although it has been quite successful for the last 3 years, it still has a long way to go to overcome the last 3 years of not a lot of profit or losses of this company. So if you do choose to invest, make sure to do your own due diligence, and thanks for watching. Bye.